Rivian soaring more than 30% this morning. The EV maker securing up to $5 billion from VW, starting with an initial investment of $1 billion with an additional $4 billion expected by 2026 through a joint venture. Joining us now is Truist analyst Jordan Levy, who just upped his price target on Rivian from $10 to $13. Jordan, great to have you with us. That price kind of blown through your target here on excitement over this news. Talk about what it means for Rivian relative to its ability to fund the existing strategy, and then what else this joint venture might be building toward.
Yeah, absolutely. And I think that the key for Rivian, especially with this joint venture announcement, is going into this, the biggest question was, where is the capital going to come from? You know, we had projected, over $5 billion in capital needs for them to reach free cash flow kind of in the end of the decade sort of timeline. And so this really addresses kind of that, where's the capital going to come from question. And that's a huge positive for Rivian. It's also a big positive to be paired up with an incumbent OEM, one of the largest in the world with Volkswagen. Going forward, look, I don't think that we should expect to see kind of the fruits of the labor outside of a capital perspective come to fruition in the next year and a half, 2 years. But with the launch of R2 and the launch of Volkswagen's future platform, I think that's when we'll start to see it come through in the 2026, 2027 timeframe. And outside of that, CEO RJ Scaringe talked yesterday on the call about the ability to kind of expand the revenue opportunities to other OEMs. Maybe once you get past that initial platform rollout in the 2026, 2027 timeframe. So I think there's a lot of room to run, but it's very early, having the agreement just announced.
So you have still Amazon as the largest shareholder of Rivian, with also that, agreement for future deliveries. And now Volkswagen, is it some kind of, endorsement of the platform, or is it just kind of an opportunistic way of essentially latching into a player that's approaching some kind of scale?
Yeah, no, I would say one, certainly it's a validation of Rivian's technology. And look, Rivian has, since the company's inception, kind of talked to the investment that it's made in the software side of things and the electronic architecture side of things. And that's been a big talking point for Rivian. And so you're seeing some of that value come to fruition. But I also think it's somewhat of an admittance on Volkswagen's part that, look, this isn't easy to do. The legacy OEMs haven't historically been built to have this vertical integration that Tesla has been so successful with. In this case, it's specific to the software and the hardware of the electronics, but there's plenty of other ways that can go. But certainly Volkswagen, is seeing the value in what Rivian's built here, and I think that shows a lot about the difference between a pure play EV like Rivian and sort of an incumbent OEM.
To the degree that there is more partnership like this, Jordan, in the industry, what does it mean for the third party? And this reaction on Aptiv today, is that overdone?
Yeah, I mean, I wouldn't say we haven't looked closely at that, but what I would say is there is, structural inefficiencies in the legacy OEM model. And as we've seen, it's difficult to realize profit on the EV segment. Especially if you're built kind of on an ICE powertrain sort of arrangement. And so as you switch to this, I do think we'll see more sort of in-house full integration built out, the likes of which Tesla and Rivian have kind of started with. And so I think we'll see that more as we go forward for sure.